Matron, take them away. Oh.
But I'm not looking at risk reward and all of this. I think that's a fable. And I did touch on this in Telegram today. And if you want to go into it, it's free. There's a link in the description below, as there's a link to many things. And join the discussion. No dickheads allowed in there, no selling allowed in there. So if you are a moron, don't bother coming in, because I'll just throw you out. And if you're coming in just to sell something, again, I'll throw you out. I just want the guys to be peaceful and enjoy the chat. And today's chat was on risk reward. Now, risk reward is, let's just call it a hot potato subject.
Mine.
Well, Mr. Webley, this is an extremely dangerous collection. It's a wonder nobody's been hurt before.
Nah, just a load of junk.
Because in the industry, it's the way it's sold, you know. Basically, the industry tells you you are crap, but you're still going to make money. No. You know, if you're a plumber and every time you leave the house, there's a leak, how many times are they going to call you back? Of course they're not. You know, might forgive you once, might forgive you twice, but you do it 6 times out of 10, you'll have the worst name in the town. You know, that's common sense. But in trading, if you think about it, why is everything so much put on risk reward? It's because it's an easy sales tool. You're rubbish, but you're going to make money. But what they don't tell you is every trade has to be identical. Same stop, same target. But there's a variable. And that variable is the conditions. Because you have to have exactly the same conditions. Same candle size, same trend, everything. Same volumes. But they're not. They're always different. Which is why risk reward always sets you up for a fall. Personally, I work on what I call ROI, return on investment. And it looks wide to start with, but it's not.
Are you serious?
Not really, because I break the positions up and I work backwards into it, which naturally increases my risk reward if that's the route you're going down. The route I go down is where I call it an investment. I will invest X amount into the trade because I know monetary how much that costs on the point of pressing the button. And if monetary is in line with the size of my account, in other words, it's not going to damage it too much, then I'm happy with the trade. I'm at peace with the trade. And then from there, I want a better pricing into the trade, which is why I go backwards. It's like getting a discount off my investment because I base the investment on the full position size before I press the button. But then I build up to that position size, if that makes sense. So for argument's sake, just to clarify, if I started with £5 a point, I would work out what the full investment is on £5 a point. Now, if that's 50 quid, that's fine. But I won't put £50 into the market at the first press of the button. I'll put £1 in. Now, if it runs for me, brilliant. But I always go into the market expecting to be wrong on the first entry, probably the first 2 entries. So 1, 2, 3 are my trade. And 4 and 5, when you see me break it into 5 positions, are there to protect the trade. It's a completely different way of thinking, but it's a profitable way of thinking. But if you think for a merry second that you only need to win 4 times out of 10 and you're going to be rich, you're living in la la land. You genuinely are, because you're always set up for a fall.
If you can't take a little bloody nose, maybe you ought to go back home and crawl under your bed.
So that's kind of my take on risk reward. And if you want to break it down into what stats are, I have shown my stats many times. The way I basically work things out is very simple. I start at 1-to-1. So I expect the market to go 50 that way. I expect the market to go 50 that way. I'm at a 50% chance at that point. I want the odds in my favour, so I stack it backwards, reducing that risk and exposure, which means if it has to come from here back over to there, it increases the upside. But it also gives me the opportunity to carve and make adjustments as I'm going, but in a profitable expectancy. And that's why I've held over 85% hit rate for years. And for those of you who followed me, I haven't faltered, you know, because I rinse and I repeat and I do the same thing over and over.